Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, and it's that time of the week, guys, where we cover the top 5 options plays for the upcoming week. Now, in terms of the options plays, guys, these are all going to be put writing strategy plays, more specifically for the wheel strategy. The wheel strategy entails writing puts at designated strike prices in hopes of gaining all of that juicy premium in our pockets by the week end if the stock price closes above our strike price of the puts. If ever it closes below, we are going to be assigned the shares, after which we will be writing covered calls on the position to generate even more premium, lower our average cost in hopes of being called away and just running the wheel over and over again on our favorite stocks. That being said, it's an extremely easy and hands-off strategy, guys, to be running. It's perfect for whether you're a beginner, intermediate, or even advanced investor, and it is the main strategy that I choose to focus on this channel. So in today's video, guys, we're going to be going over a bit of the strategy rules that we apply when doing the put wheel. If you haven't seen my full 30-minute breakdown, an extended version of how I run this strategy and how I choose my plays, I'll link it in the top right corner right now and also leave it down below in the description for you guys to watch at a later time. After that, we're going to be recapping last week's 5 plays and doing this week's 5 plays as well. I'll also include a few bonus plays to keep on a watch list closely over the next couple of weeks, as those plays are very good as well. So with all that being said, guys, let's jump in right into today's video, and we're going to be starting off with a bit of strategy rules. Now, before we do these strategy rules, I just wanted to set the context of the upcoming week. Now, obviously, our bulls are in full control, both on SPY and QQQ, right? Daily uptrends, but we are wary of the potential bear flush. We've been talking about this for a while, guys. March is a usually negative seasonality period in the early few weeks of March, and the markets haven't really consolidated much over the past 4 months. So we do have another big CPI report on Tuesday morning as well, which could add some volatility to the markets. That being said, with my overall penchant of leaning bearish into this week, potentially for the bears to start retesting the lower ends of these trend lines and SPY on QQQ, I will be going a little bit more conservative in my strike prices this week, just because we have a volatile event on Tuesday. So if ever you are running this strategy as well, I would completely understand if you wait until Tuesday morning to be writing some plays after the CPI report comes out, because any negative news headlines, guys, will probably send us further and further down, and we want to give ourselves a good little margin of error to not get trapped in positions. So with all that being said, guys, with a little bearish lean coming into this week, these are the rules of the put wheel strategy. So number 1, you want to be writing puts always on solid companies, guys. Please never write puts on companies you do not want to own. It's rule number 1. It just makes managing the position. If ever you are assigned, guys, you want to be assigned on a company you do not mind owning at a price that you do not mind owning. Anything other than that, if you get assigned a company you don't know much about, you don't really like, it's going to be tough to manage the position and have conviction in the position. So please, this is a very important rule. Number 2, we want to be writing on red or flat days. This is just because every single stock has a given expected move over the course of the week. Let's say Apple traditionally moves up and down 5% on a given week. Well, if on a Monday morning, Apple is down 2-3%, let's say, you know that roughly Apple can only really go 2-3% more to the downside in a usual week, right? So that's why if it already opens red, it opens the door to be writing even lower strike prices, which just adds to the probabilities on our side that we will be able to pocket that premium, and those puts by the end of the week will end up worthless. Now, third, we want to be writing puts on stocks that are in monthly uptrends or at least in long-term ranges. You'll see that all the picks that I always pick on the channel are all in monthly uptrends and long-term ranges. Once again, just adds to the probability that long-term bulls will be supporting the levels that we choose to write at. Very, very important. Number 4, the stock needs to have no earnings this week, guys. This is as big of a rule as rule number 1, it being a solid company. No earnings this week. Earnings just adds increased volatility to plays. And even though the premiums may appear at face value to be juicier on weeks where companies have earnings, in my experience, guys, if you're not a seasoned trader and you don't know much about the company that you're trying to write an earnings play on, it's a very quick recipe to end up with a loss. And then managing that loss, guys, tends to become difficult because you may be expecting a stock to maybe only move 5, 6, 7, 8% to the downside. But if they have a negative surprise and go down 15, 20% after earnings, you're instantly down a lot of money. It adds a lot of stress, right? And that's just not what we want. So we want to be keeping this strategy as smooth as possible. And that really entails staying away from earnings plays, even though the premium can be juicy. I never recommend anybody to play earnings plays. Now, the next rule, we want to be writing puts at areas of support or at least a breakout retest. Now, a support area is very self-evident. The breakout retest is a bit less self-evident, but nonetheless, you guys will see is a very high probability trade. So let's take Autodesk, for example. This lower end of this range right here would be your support zone, right? In the roughly $190 range on Autodesk. So that's writing at support. Breakout retest is when you have a bullish break of previous resistance structure right here. You want to be targeting the retest of the zone, which was previously resistance. It'll now be support, and you usually get a run thereafter. This retest zone is a high probability trade, so that's why I like it a lot. So that's the difference between the support and the breakout retest. Both very good areas to confirm that buyers are present. So that's where we want to be writing our puts. Just once again adds to the probabilities of us winning those trades over the course of the week. Now, the next rule, we want to be targeting between 0.5% to 1% in weekly premium, guys. If you're always writing based on the value of your account, if you're always writing 0.5% to 1% rule in weekly premium, you should be making between 25 and 50% roughly on an annualized ROI basis. And this level, guys, is the sweet spot that I found after a number of years of trading this strategy. It is the sweet spot to where you will still make a decent amount of money, but you're also not taking that much risk. That's why I recommend always targeting between 0.5% and 1% in weekly premium. The math is as follows, guys. If a stock is trading roughly around $100, let's say you want to write the $100 put, something like that, you need to find at least 0.5% to 1% on the contract for a $100 stock. That would mean 50 cents to about $1. So whenever you're looking to make plays at support areas, always check if you are getting some good premium. You always want to leave yourself a little bit of wiggle room here. As you'll see in all the plays this week, that's always what happens. We're always targeting a strike price maybe 3-4% below the current market, and those usually pay about 0.5 to 1% in weekly premium. Now, before last rule, we want to write at or lower than the expected move. So a stock in any given week, as explained before, guys, always has an expected move. If you don't know what the expected move of a given stock is in a given week, go to this website right here, optionsai.com. They have a free expected move calculator here. It's a free website, not sponsored by me and everything. You can see up here, I have ON Semiconductor pulled up, and it gives us the expected move up or down. We want to be writing below the expected move to the downside. Just once again, increases our probabilities of those puts ending worthless and pocketing all the premium by the weekend. And lastly, we want to set a take profit at 90% of the contract value. The beautiful thing about this strategy, guys, is it's extremely hands-off. You really only need about 15 to 20 minutes of daily interaction with certain watch lists that you may have set up to be able to find these plays. And once you pretty much write the puts, you can pretty much forget about them so long as you you set a take profit at 90% of the contract value. So let's say you write a put for $1, you want to be putting a buy limit order back on that sold put at about 10 cents, 90% of the contract value. So if you're not at your computer screen midway through the week when some of these puts end up worthless, they just take the profits automatically for you. That way you don't have to be looking at your charts, you know, for several hours on the day looking when is the best time to take profit. Keep in mind, time decay is working in your favor for these options because we are writing options, not buying options. So we're selling options, that is. So with all that being said, guys, let's go into last week's plays. Now, the first play that we're going to take a look at here, guys, is going to be Apple. So Apple, as of last week's video, we were targeting, right? Apple, you can see here, guys, that Friday, we did the video on Sunday, of course, and Friday we had closed about a 179. Now, we were saying that if Apple opens lower in the week, we were looking for 175 or better. The expected move, as of, 2 Fridays ago at this point, the expected move for the following week was about 176. So we wanted to be writing under 176. So I was calling for either the 175 or lower depending how Apple opens on Monday. Now, this is very, very important, guys. Obviously, if the expected move is 176 and then Monday the stock already opens below the expected move, let's say it opens in the 175.50 range, well, we don't want to be writing the 175s at that point, guys. It's just too close with 4 days of remaining trading. So what we would like to do is more specifically write one strike lower, as low as possible, while still respecting our 0.5% rule. I actually took this trade myself. So what I did on Apple is I wrote the 172.5 puts. You can see that contract right here. And we were indeed able to get about 0.5% for those. You can see I got $1.17 for the 172.5 puts. Now, that was very decent premium, but Apple actually traded below that for a significant portion of the week before retracing on the Friday session, finally back into the high 172s, 173s. Now, I was personally able to close this trade on Friday afternoon. You can see I bought it back for about 21 cents, about 80% profit. However, if you would have held it through the close, unfortunately, you may have been assigned here as the stock did close under 172.50. Now, not a big problem at all, guys. Since we're respecting rule number 1, you want to be playing a solid company and you want to be playing a stock at a decent support area that you want to own, right? So even if you are assigned, guys, not too big of an issue. If you did write the 172.5s, you probably got at least $1 in credit for it. So that brings your break even down to in the 171 area. And as of this current week, guys, you will be able to write covered calls if Apple opens roughly in the same price tomorrow. You will be able to write covered calls for this week for all the way up to, about $1.50 right now, which is about 1%. So if you were to write $1, your average cost right now should be in the 171s. If you write the $1.50 calls for tomorrow, for Friday, at the 172s, let's say it doesn't go above 172.50 this week even as well, your average cost, guys, is now going to be in the 170s or maybe even high 169s. You're just getting a better and better average cost on Apple. And keep in mind, guys, Apple is already off the all-time highs by about roughly 15%. So any additional bonus is very, very welcome indeed. So very happy about that. But still, being assigned is never fun. It is only fun when you want to own the stock, right? So in this case, if anybody who's been assigned is having a negative view of the stock, well, you probably are not in the stock for the right reasons, right? It's Apple. In my opinion, guys, it's a very safe stock to be assigned on. You'd much rather be assigned on Apple than some stock that you know a lot less about, right? So Apple, still a very, very good play in my opinion. And we will be looking to play further puts over this week as well. But if you did get assigned, guys, the covered calls are extremely juicy right now. It's going to allow you to further bring back your average cost. And that's the nature of the wheel strategy, guys. Sometimes we do get assigned on this play. You should be happy that you got assigned on a stock that you love at a price point that you're happy to be willing to take the stock and write covered calls on. It's just going to generate juicier and juicier returns the whole time that Apple trades below here. Eventually, when we do get a recovery back over 172.50, you're going to be able to pocket all of those juicy gains. So look forward to it, guys. It should not be a negative event when you get assigned. You should be actually looking forward to being assigned on stocks that are trading in very, very decent support ranges. So that is pretty much the trade that we took on Apple over the course of last week. Now, the second trade we were looking at is Google. So Google, for much of the same reasons that of Apple, right? We are now breaking down on Google, coming very, very close to our next support area, which is roughly the 131, 132 zone. So we were looking at Google. This is the candle close as of 2 Fridays ago, right? So we were looking on Google, depending on the price that Google would have opened on Monday morning, we were looking for as low as possible while still respecting our 0.5% rule. So on Monday, I was able to personally find in my own account, we wrote some Googles here. You can see that I wrote the 131s on Monday afternoon and we got about 70 cents. Sorry, you can't see my shoulders kind of in the way here, but we got about 70 cents right here, which is roughly 0.5%, right? 0.5% would be, for 140, 0.5% would be 70 cents. So we did get above 0.5%. If you don't know how I'm calculating that in my head, guys, just go half of the strike price in cent increments. So 131s will be roughly about 65, 66 cents, let's say. And when we got 70 cents divided by your strike, you just can see here that it is above our 0.5% rule. So I went really low on Google and it did play off, guys. I was able to close this trade later on in the week here. And you can see Google 131s, where are they? Google 131s, we bought them back here roughly, almost worthless for about 5 cents here. So very, very decent trade on Google as well. I'm extremely happy with the way that played out. It would have been really tough to be assigned on anything here, guys, no matter at what point you would have written this on Monday. Here's your Monday candle, open at 9:30 all the way down to the 134s. So at that point, tons of lower strikes became available. The 133s, the 132s, the 131s. And if you would have written pretty much any which one of those, they would have ended up worthless on Friday. So very decent trade on Google down here in our lower support levels, right around your 200 daily moving average, which is this green line here, and right around previous big support area, which is 131, 132 as well. Very decent trade on Google. The third trade we were looking for here, guys, was Shopify. We were looking for Shopify, guys, roughly in the $71 range. It's a classic breakout retest on the monthly. So look at this beautiful monthly uptrend right here. We're looking to retest this previous area of resistance, should now be acting as support, and that is pretty much, you can see it best on the weekly as well, right? This 71 line, extremely solid support level. Now, I did not take this one on Monday, but I did take this one later on in the week on the Wednesday session. However, they were available pretty much all week. From Monday to Tuesday, you could have gotten the $70 or the $71 strike price very, very nicely indeed for some juicy premium. Now, if you take a look at my own account, let me just try and log back in here. My apologies. So as I was saying about Shopify, guys, if you take a look at my own account, you can see that I did write these Shopifys here on the Wednesday session in the afternoon, 71 puts for about 23 cents. So I got these later on in the week, still ended up worthless though, closed them for about 2 cents, 90% profit, very juicy trade on Shopify as well. So very happy with the way that one went, just clean in and out trade of that premium. Shopify never really coming down into the $71, $70 range. Now, the other trade that we were looking for here, guys, the pretty much the before last one was going to be Nike. So Nike, we were looking anywhere $98, $97 puts. And if you would have taken any which one of those contracts, you can see Nike ended pretty much above 99. So the 98s, 97 puts would have been juicy. We were looking for a dip on Nike on Monday, which is exactly what happened. Nike was in a very juicy area of support here, guys. Anything under $100 becomes very juicy to be writing puts. 98 now at this point, all the way down to 95 will continue to be a very juicy area to be writing some puts at. Nike representing some very decent value down here, right in our previous support pocket as well. You can see it a bit better on the daily. We did have one spike down here in late 2023, but for the most part, guys, the $98 range seems to be holding up as some pretty juicy support. So they did open up the 98s and the 97 contracts here after your Monday session. Even though it dipped a little bit lower into the midweek, we were able to recover over $98 and $99 leading into the end of the week. I did not take this one personally myself. I already have about 100 shares that I got assigned on Nike after an earnings play went wrong. This is why I tell you guys to avoid earnings plays. Sometimes I do them, but you can see sometimes you just get stuck in them for a considerable amount of time, right? We've been in this one since pretty much the December trading session when they had their most recent earnings, and we're still in them. So for me personally, Nike, I'm looking to play, just because I have a little bit higher average cost, I'm looking to play Nike as closer as possible to $95. But if you don't have a starter position on Nike, anything in the high 90s, even 96 at this point, guys, $96, $95 is a perfect opportunity for the foreseeable future. Very happy with the way this week's trade played out personally as well. We were also looking into 4-hour oversold conditions leading into the Monday session, which heavily allowed price to have a significant bounce from there. Now, the last trade we were looking at here, guys, was Alibaba. And Alibaba, we were looking at it lower in the $71 range. This, again, was another play that I took on my own account. You can see those right here. Not sure why it says the 0 puts. They're actually the $71 puts. So we took these pretty much on Monday in the afternoon. We got 53 cents for them, well over our 0.5% rule. And you can see that we closed these later on in the week here. Where's the Baba trade specifically? Sorry about that, guys. Just trying to find it right here. Where is Baba, as a matter of fact? Oh, here we go. We bought it back on the Wednesday session here. Almost worthless, 90% profit for about 6 cents. Very juicy trade, guys, on Baba. As I was explaining on Baba, guys, this lower $70 range is extremely good support. It's very close to your previous IPO prices back in 2015, 2016 as a whole. I understand that this stock does break one of my primary rules, which is it's not in a monthly uptrend. However, it is in a longer area of support right down here in the $71 range. And the Alibaba's fundamentals are the one justification for this trade, guys. insane levels of free cash flow, very good levels of buybacks, very good EPS and revenue growth over the next 3 to 4 years, which is why I had no problem playing BABA down here. And I will continue to play BABA down here in the lower 70s to high $60 level if it does manifest. But we had a perfect little dip here on the Monday session, which came down into the $71, $80 range. So at that point, guys, the 70 and even 69 puts were open. I went a little bit greedy with the $71 puts, but 70s and 69s were also available for about 0.5%. And you can see that trade played out perfectly towards the end of the week here, ending netly above any of those lower strike prices. So very decent week, everything except for Apple largely ending worthless here. And as I said, guys, if you were for some reason assigned on Apple, I really wouldn't be nervous, guys. Beautiful company. The covered call premium is there, and we are at heavy areas of support. So with all those plays being recapped, guys, let's get into this week's plays, and you will see that there are a few recurring plays as well. The number one play is once again going to be Apple, guys. I've said this now for a few weeks running. As long as we stay here in the lower $170 range, I was interested in Apple ever since 180. If we keep trending lower here, 170, 165, I will be playing this stock as well. It still represents a very good previous resistance, all-time highs, previous support. The entire last fall sell-off, guys, we could not get lower than 165. That being said, if for ever which reason we break this, guys, right? We're still relatively in daily oversold condition, so we could be expecting a little bit of a bounce. And after that, our next area of support is really not that far away, guys. It's pretty much 155 down to about 150, so not that far away from our current share price nonetheless. However, still a little bit of a drop if we were to retest that lower area of support. It is an additional 10% drop. I am very confident in the bulls area and the bulls' ability to protect this zone. That being said, considering the fact that this week may be in red, we are going to give ourselves a little bit of a buffer on Apple. Now, the expected move for the week on Apple is about 167.02. So we want to be writing one strike price, at least one strike price below that. Keep in mind, guys, if Apple for tomorrow, for whatever its reason, already opens up, 2-3% to the downside at 165, 166, it's going to be too close. At that point, we want to be going for the 162.5s. So it all depends how fast Apple moves down. That's where we want to be targeting even lower strike prices below our 167. So let's take a look at some of the contracts here on Apple, and you will see as of now, guys, right, to be below the expected move of 167, we need to be writing the 165s. Is there enough premium on the 165s? Not yet. You can see we only have about 41 cents. We want to be seeing roughly double that to represent our 0.5% rule. Needs to be about 82 cents on the bid for this trade to make sense. That being said, if we open extremely red on Apple either Monday or Tuesday, and we dip down here 165, 164, then most likely your 162.50s will be opening up, and that is significantly below your expected move. So the 162.50s should be a primary target for trading this week. The 165 may be a little bit too close depending how we open up on Monday, right? So just keep that in mind. 165s if you're a little bit more aggressive. If you're very conservative, maybe wanting to wait for the 162.50s for Apple in that respect. Any discount on Apple, guys, is extremely juicy. Keep in mind, if we do dip down to 165, 17% off the all-time highs. 162 would be 18.5% of the all-time highs. Very good discounts for Apple as a whole. Now, moving on to our second play, guys, once again, going to be Google. So I love these big tech stock plays, guys. Big tech is one of my favorite trades that I can make when trading the wheel. It's just such an easy trade to make, guys. These companies are so solid. They have such nice growth prospects and profitability and cash flow that we can comfortably rely on to eventually count on the bulls to heavily be buying these dips and reward us to the upside. That being said, Google is currently in a little bit of a pickle. Daily downtrend has been confirmed now for several weeks in a row. So if for every which reason, guys, we open negative on Monday and Tuesday, we'll be looking to write below the expected move on Google for the week. Expected move for the week, guys, on Google is about 133. So we want to be targeting as low as possible below this expected move, still getting 0.5% to 1% per week. So let's take a look at our contracts here. I've shown you guys, right? The big area of support right now at this point is going to be roughly 131 to 130. So we want to be trying to get the 131 or 130 puts at best, right? So let's take a look at Google, see what the premium is doing right now on the chain for the 130s and 131s. We can see right here, not yet offering enough premium, is it? As low as we can go for 0.5%. The best you can get right now is the 133s. 133s still a little bit high in my opinion as it is at the expected move. So what we need to see on Google is if we get a drop tomorrow morning on Google, let's say it goes down 1-2%, comes down into the 133s area, let's say, right? Maybe 133, 133.50, even 134. That will indeed most likely open up the 131s and 130. So keep a close eye on your premium 130, 131 strike for this Friday. We need to be seeing at least 65 cents on the bid to make that worthwhile. So I will be waiting for those to open up on Google specifically. Now, the third play that we're going to be looking at, guys, is a company called ON Semiconductor. Very, very easy semiconductor play. I've brought this one up a few times on the channel, and we want to be targeting this big area of support, $71 all the way down to about $60, right? Whole area acting as extremely solid support. You can even see that on the monthly time frame. See it even better, how many times it was resistance, and now it's been acting as beautiful support. So we want to be getting as close as possible to $71 as we can. That being said, the expected move for the week is roughly 75.52. So if ever we get some continued sell-off on semiconductors, if ever Nvidia continues pulling back this week, if ever companies like AMD continue pulling that back this week, if all of semiconductors continue pulling back, this is my favorite play because we are so close to a massive area of support. That being said, we need this one to come down on Monday or Tuesday for it to open up these lower strikes. As you can see right now, guys, we're still roughly, 10% away from that lower level. From the expected move, we're only about 4%. So this level right here is twice the expected move. Now, let's take a look at how much premium is available on those $71 contracts. You will see, guys, that it does need to drop a lot. So as you can see right here, even the 73s and 72s not offering 0.5%. You can only get 0.5%, guys. It's midway between 74 and 75, right? For true 0.5%, you'd want to see around 37 cents on this bid right here, and 74s aren't offering enough. So if ever semiconductors have a heck of a sell-off tomorrow and ON Semiconductor goes down 3-4% and opens right here, maybe even Tuesday after CPI, 75, even $74, big sell-off over the next 2 days, let's say, that is when you will get your $71 or even $70 contract to be opened up. At that point, guys, we would be trading, 1.5, 2 times the expected move. Very juicy area. So this is going to be one of my favorite plays I'll be looking at for the week. So just keep an eye, guys, on those contracts. 72, 71, $70, very juicy area of previous support. Now, the fourth play we'll be looking at, guys, is a cheap one. So if you don't have that large of an account size, this one could be up for consideration. It's going to be SoFi. SoFi, a very good company, guys. I was extremely happy at their earnings report that came out roughly a month ago at this point. The company is finally profitable and growing all lines of its business extremely healthily. That being said, they've most recently had about a 15% sell-off after announcing that they were issuing new debt, which could potentially be convertible into shares in 2029. So the headline at face value was a bit dilutive, meaning if all of those bondholders were to convert shares in 2029, it would dilute the stockholders by about 10%. But that's indeed if everyone redeems at the same time, right? Not a very likely scenario. The stock reacted negatively to that news, and we got a nice 15% sell-off. Now, heavy area of support down below here, 7 all the way down to $6.50. You can see it best on the monthly, struggled to close monthly candles above the $7 range for a long time, and now we've struggled to close monthly candles below this. So $7 is extremely solid support. You see it here acting like this on the weekly, bounced from here in the past, and was previous resistance a number of times in the past as well. I like this $7 level. The valuation of the company is very good as well. Very decent support. So we will be looking for the $7 strike price. I played these last week myself and was able to close them at a nice little profit. I'm not sure if we're still logged in here. You can see I wrote the SoFi March 15 puts off of that dip. We got 26 cents. So this was for this Friday coming up, but I closed them early, wrote them for 26 cents, and we closed them on Friday here for about 6 cents. So we'll see, can they become available once again? Let's take a look, guys. Expected move, $7.22. So we want to be below that. Luckily enough, our $7 target strike is indeed below that. That would represent some downside from the Friday close of about 8.5%, but still $7, extremely solid level in my opinion. Now let's take a look at some SoFi puts and see how they are trading. You'll see here that we're only getting about 5 cents. Now, quick little rule, right? 5 cents is still well above our 0.5% rule. 5 cents divided by your $7 strike, that's about 0.7% on a given week. So even at the current premium, they are juicy, guys. But since it's such a cheap stock, I want to be looking for it to come a little bit lower, guys. If this thing can come down 740, 730 earlier on in the week, we may be able to get even more premium, and it may just open up not only the $7, but if you want to be a bit more conservative, you can go for the lower end of this support range right here, which is about $6.50 as of now. The 650s aren't offering much of anything, right? Only 2 cents. You'd want to really see, 3 cents, 6 cents. I'm looking for 1% more specifically, guys. So if I can see anything above 7 cents on the $7 or anything above 7 cents on the 650s, I'm definitely going to be going for those. Probably be writing, 3, 4, 5 contracts, which is still a relatively small position, but the premium is good nonetheless. Very juicy area of support in my opinion. Now, our last play for the week is a play that I've featured many times on the channel and potentially could be a good play for this week as well. It's going to be Caesars Entertainment. Caesars has been in this beautiful area, guys. Look at all this support down here, talking, $40 roughly all the way down to about $37. This whole area is extremely solid support. That's why I love playing this stock. Now, they don't have any earnings coming up, so that's good. The expected move for the week is $40.35, this red line down here. So we want to be riding below this expected move, right? So we want to be targeting roughly, guys, the 40s, even in the 39s if possible, which would represent, some downside of roughly, 5 all the way down to about 6%, 6.5%, which would be a big move for Caesars Entertainment. As you can see right now, let's take a look at the chain to see what is available, guys, below this expected move of roughly 40.36. We'll check on the 40s and all the way down to 39. So you can see the 40s are actually paying 0.5% right now. 0.5% would be roughly 20 cents. The 39.50s, not there yet, and the 39s, not there at all. So what I would want to see on Caesars on Monday, if the broad market has a little bit of a sell-off coming into Monday, we may see Caesars open up, in the $41.50 range. If that does happen, guys, it should generate even juicier premium on the lower strikes here. We're going to be targeting as low as possible while still getting 0.5%. So 39s, 39.50s, if we can get those, guys, I will be trading them myself. And keep in mind, if for ever which reason, guys, just like Apple last week, if for ever which reason Caesar opens, 5% to the downside right away at 40 below the expected move, well, obviously, guys, we want to be going significantly lower, right? If we already open on Monday at 40.3, let's say, we're not going to be writing the 40 strikes, are we? Maybe even the 39.5s are too close at that point. We want to be writing as low as possible. So take a look at this chain. If we open 5% to the downside, you may even be able to find the 38s, which would be very far off the expected move, right? So that's kind of how I analyze these depending on how the stock price opens on Monday. So as low as possible while still respecting our expected move. So with all that being said, guys, there were some plays that were up for consideration for this week that were featured in prior weeks. One of them was Starbucks. So Starbucks also approaching a big area of support, talking about the $90 range. The only problem with Starbucks, guys, is that the implied volatility is so low that you have to be really close to the strike price, right? So take a look. We're trading at about $91 on Starbucks, and you don't really get some juicy premium to the downside. Take a look. You have to go really close, guys. To get 0.5%, you have to go for the 90s, which is only like $1 away. That's literally 1% away. Not enough in my opinion. The only time I'm going to be playing Starbucks, even though it's at support, I want to see maybe a 2-3% downside day on a Monday, which could open up some juicier premium to the downside. That's why I'm not recommending Starbucks as of right now. I would only play it if we have a big 2-3% downside move on the Monday, which could open up some lower strikes, right? Like $87, $86, because as of now, it's just a bit too close for my liking. Another play that's similar to that was featured in last week's video is Nike. So even though Nike right now is trading at 99.16, you may think, well, I can still write the 98s or the 97s. Bit too close in my opinion, guys, considering the fact that we may be bearish for this week, a little bit of a bearish penchant. I really want to be careful. And Nike, I would only be comfortable if I could get 0.5% on my puts If the puts were about 4% away, that would be about $95. Unfortunately, guys, currently Nike is just not offering enough premium. Take a look, right? The stock is trading roughly at about $99. And how close do we have to get, right? You can see that, the closest we can get, we're about 0.5%, is about 97. So 97 is really only about 2% away from current strike price. A bit too close in my opinion. That's why I'm not going for Nike this week unless we get a significant dip on Monday morning. Talking about 2% to the downside may bring us into the 97, even high 96s. If that happens, then I may be looking, guys, the 94s, 93s, if I can get 0.5% on those. Just not enough premium. The other one up for consideration that's up for consideration, that's a very good play, is Shopify. Once again, Shopify is still targeting 71 down to $70, and the premium on them is not so bad either. So if we take a look at Shopify, guys, here for the $70 range, same one as the week prior, you can see that we do have still 0.5% on those, roughly at the 71s. So I'll be keeping a close eye on Shopify. If we do dip here, guys, the expected move on Shopify for the week, let me just pull it up. I don't know it by heart. The expected move on Shopify, if the chart will load here. Okay, still nothing. That's very interesting. Apologies for that. So Shopify, guys, the expected move, 70 to 80. So $70 strike would be below the expected move. If we do get a negative 3% day to the downside on Shopify, let's say we open Monday into the Monday session, we're down already to 73 or whatnot, then I'll probably look, guys, 69 if I can. I want to be a bit conservative this week, and 69, you can see, is still the top end of this previous resistance, bottom end of this support, right? $69 would be a very sweet spot, so that's what I'm going to be looking out for. 69.70s on Shopify for that one specifically. Still a very decent play. And you guys know for the rest of my bonus plays, guys, that I always give to you guys, build a watch list with some of these stocks and it'll show you why I like these stocks so much, right? So OXY is one that I always look at in the $56 range, $55 range, such a juicy area of support, such an easy stock to play. MRO, Marathon Oil, same concept, right? This whole area right down here, $21 all the way down to about $20. Such a good area of support. Whenever we're close to that, I like playing this one as well. Philip Morris, another one. Juicy area, guys. $90 down to about $87. Whenever it comes into this range, it's always up for consideration, to play Philip Morris. Such a good support area for the stocks. You'll see a lot of these plays look the same. Texas Instruments, whenever we come down into this lower 160 all the way down to 155 range, love to be playing this. Look, it's been playing as support here, guys, for a better part of the last year and a half at this point, except for certain times when the stock dips below there. For the most part, it's usually able to hold 160, 155 as support. That's why I love playing Texas Instruments in that range. Another company, guys, Johnson & Johnson, between these two yellow lines, right? 158 down to about 152. Whenever we're trading in this range, always on my watch list to see if I can get some juicy premium with some decent margin to the downside, right? So I always want to be looking at, can I get maybe, 3, 4, 5% lower than the current price while still being in this little box right here? Such a good, healthy support area. Previous resistance for a long time, right? So should be self-evident why that's a good play. And the last one, guys, that I always look into every single week now at this point is Pepsi. Pepsi trading at about 163.05. If I can get Pepsi, guys, 162, 160, I'm always looking, can I get enough premium? Is it worth my while to make this play down here? Such a healthy play on Pepsi here, guys. You can see every time we dip down aggressively into this lower 160 range, the bulls are usually always able to hold it up. And this has been the case, guys, for the past 2 years, right? Since April 2022, every time we come in down into here, the bulls usually putting up some good support. So those are just some few trade ideas that I always keep on the back burner, always keep on a watch list, and on any given week to be writing those companies. So hopefully this video was informational and helpful for all you guys if you're looking to expand your knowledge of the put wheel strategy. So far, it's been very good. Aside from Apple this past week, guys, there really hasn't been any other plays that we've been at a risk of being assigned. So the strategy, since I've been doing these videos about 6-7 weeks in a row at this point, none of them have been assigned. Only this most recent week on Apple, you could have potentially been assigned. But then again, guys, it's Apple, right? Nobody should be nervous about being assigned shares of such a beautiful company. So hopefully you guys enjoyed the video. If you did, consider dropping a like, would really appreciate it. Consider subscribing to the channel if you're new as well. And if you like this type of content, guys, we put it out each Sunday, but every Monday to Friday, I do daily market recap videos. So take a look at those. You can also see the trades that I do pretty much in real time on the Monday and Friday videos. I could do a quick recap of my portfolio at the end of those videos as well. So if you want to see my own trades that I'm doing throughout the week, just take a look at tomorrow's video as well after the close. And as usual, guys, if you have any questions whatsoever on the strategy, or if potentially you got a sign to play, you're not too sure what to do with it, I will give you some tips as to what I would do if I were in that position. Obviously, none of this can be official financial advice, but I will do my best to help you guys out in any aspect of your trading. Just feel free to leave a comment down below with all of your questions. So with all that being said, guys, take care. Have a great week of trading. I will see you in the daily market recap videos. Peace.